And welcome to the OANDA MarketPulse charting analysis video. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it's been a pretty negative day in the markets, big losses in the equity markets in particular. We can see indices heavily in the red, the FTSE down 3.7%, CAC 3.8%, the FTSE MIB just below 5% in the red. Very negative day. The US has opened primarily in the same fashion, down around 2.5% at this stage. We are seeing a bit of a flight for safety really in the currencies as well. Japanese yen benefiting greatly in particular from these moves. Now, what I'm going to touch on today in this video, of course, this is just going to be reverting back to Monday's video. I'm going to focus on the indices at this stage because we have seen this heavy selling, and given the warnings that I gave on Monday about what kind of a week this could be for the equity indices, we can see today selling in the German DAX was very, very heavy. Now, there was a suggestion yesterday from this candle that we were going to see a negative day, because despite the early rally that we did have in it, we did see some selling into the end of the session, and it did erase more than half of its gains on the day. So what you're left with here is this long upper wick, which may suggest that the following day is going to be negative. It's certainly a little bit of it's certainly quite a bearish signal, especially when it comes a day after we saw a similar reaction. Really. We saw a rally early on in the session, and then we saw selling into the end. So the fact that we've had this 2 days on the row, I think, is quite concerning. The fact that it also happened into a prior resistance, into a prior support level, obviously turned resistance. Again, that's another bearish signal here. So when we saw red early in the session, that wasn't an enormous surprise. Now the question is, what does this mean on the weekly front? Because this is where we highlighted on Monday. If we see negative session, if we see a very negative week this week, if we see a break of this around say 9300 level, then that may suggest that we've got more significant prolonged selling to come. The reason being, of course, that we're looking back at these lows from the Eurozone debt crisis back in 2011. This is an ascending trend line from here, 5 touches along the way, so a very clear-cut trend here. We've already had a close below that ascending trend line, so I've said really the warning signals are here that this is more than a correction, potentially an indication of a bear market territory. Really, confirmation for me comes from the break of this 9300 level, because then you've got a break of prior support. This is support throughout. This is 2015 support really that we're threatening to break below at this stage. The break of the 2015 lows combined with the break of the ascending trend line for me is extremely bearish. Now at the moment, this trend line, this support around this 9300 level is holding up, but if we do see a close below here, then that would suggest to me there are some worse days to come. This again would be a very bearish daily candle coming following these two important breaks. So I think the next 24 hours in this DAX could be extremely key. Now we're seeing similar signals in the other indices as well. The Dow, again, we're going to have to stretch out to the weekly chart here, but this is something we have highlighted on the weekly charting video, on the indices video, of course. Now this is again this trend line goes back to the 2009 low, so this is the height of the financial crisis. Now what makes this important, despite only having 3 touches along the way, so it is only technically just a legitimate trend line, but despite only having 3 touches along the way, what makes this really significant is the fact that we've also got the break, of course, of the, sorry, I've just missed it, the 200-week simple moving average as well. I've just got to zoom back here to get more data so that I can show you this 200-week simple moving average. So this is the 200-week simple moving average. As I showed you on the weekly chart, it has proved being a key indicator of sentiment or momentum, trend change in the past. So we've got this combining with the ascending trend line. It looks as though at this stage we are going to see a weekly close below here, which again is just another signal to me that this is not a normal correction. This could be, we could be in for much more painful days to come. We could be in for something that approaches more along the lines of bear market territory here. Of course, the next levels of support would be these 15,200 to 15,200 to 15,300. But at this stage, I'm just keeping an eye on the break of that trend line, and at the moment that looks likely to come today. It'll be interesting to see how we trade into the end of the session. If we trade back above the trend line by the end of the session, then maybe it would suggest otherwise, but that's looking quite bearish for me at this stage. Same applies to the S&P 500. Now, of course, we've got this trend line. This is not as conventional a trend line, I should say, on the S&P 500 because of what we highlighted in Monday's video, with the fact we've had they broken along the way. But we have already had a weekly close below this ascending trend line, and what I've highlighted previously is that what I'm testing for next is the break of these support levels. This is the support that we've had from April 2014, October 2014, and then again in August 2015 when we had the big sell-off in emerging markets. Already we've seen those August lows broken, so that is very significant for me. I think this level is going to come under severe pressure now in the coming days, or if not in the next week or two. And if this is broken, this again is a strong indication that we are going to enter into bear market territory, and again a sign of more painful days to come. Now, today's candle again is very bearish. We did see a correction testing those previous support levels prior to this. Yesterday's candle again, that's very bearish. All you have to do is look at, say, the 4-hour charts here, and you can see that this is just prior support being tested as resistance. You can see this nice clear resistance, this evening star formation, and from there it's all down. On the daily chart, you can see this massive upper wick, which again the bears came back in and drove prices down to towards the opening levels. So this daily candle is not a huge surprise, but it is extremely bearish, especially if this ends the day near its lows. Then that is an extremely bearish candle and does point to a few more. It would suggest that the rough ride is going to continue. Now, in the currency space, dollar CAD has been an interesting one today. We've had the Bank of Canada interest rate decision. Now, this looks like an ordinary day of indecision, consolidation potentially, but really all we have to do is zoom into, say, the 4-hour chart, or the 1-hour chart I think is even better, and you can see what happened when the actual decision for the Bank of Canada came out. Now, this announcement was made at 3 p.m. It doesn't take a genius to work out when this came. It was no interest rate change, so there was around a 56 to 58% chance priced into the markets of an interest rate cut. The interest rate cut didn't come. Not only this, but the rhetoric wasn't as dovish as people were anticipating. So what we initially saw was a massive buying in the CAD against the US dollar, which drove prices back towards this 145 level, which again is coincides with the ascending trend line from these lows on the 11th of January. Now, I should stress that it only had 2 points up to this point, so the fact that this third touch effectively confirmed this as a trend line. But what was far more significant on this hour chart was that after coming back to these 145 levels, before the hour was even out, we reversed all of these losses and actually closed higher. Now, that is extremely bullish. Now, I know that we've had some selling since, but this next period is going to be very interesting for the pair, because if we see a move below the 145 again, then maybe that suggests that this was just a lot of volatility around a big news event. If we see the pair pull back towards these 145.50 levels where it's currently trading, if we see it move back higher towards the end of this hour candle, or if we see it trade above the highs of this previous candle in the next couple of hours, then that would be a very bullish signal, because some very bearish news prompting, of course, a very bearish initial response, following that with a move, another move higher, is very bullish. That suggests that the overall sentiment in the market is overpowering even something as significant as an interest rate decision, where the market was anticipating a cut and instead getting no cut and a less dovish announcement. So this trading in the next hour or two is going to be extremely interesting in dollar CAD, and at the moment I'm struggling not to be quite bullish, because this candle is the response in this candle following that initial sell-off is extraordinarily bullish. This is a 150 pip sell-off and reverse. That's quite bullish in my opinion, but we'll see how this candle and the next one pans out before I really, I guess, commit to this decision, because because the interest rate decision was dovish, and therefore it was less dovish, and therefore you would expect some downside, especially given the prolonged period of buying in the dollar CAD. But this reversal really has deterred me from being bearish at this stage. Dollar yen next, and again we are potentially on the verge of a very important break. I've highlighted this level here around 150, well, 115 to 115.50 to 116.50. Numerous supports throughout the last 12 or 13 months. We've got the 89-week simple moving average providing additional support here, potentially the neckline of a head and shoulders, and again this is coming under significant pressure already today. We have seen it trade back at these 116 levels. Now we've seen a rebound off it at this stage, but to me this continues to look bearish. If we can see a close below these this support region, I think we could be in for far more significant declines, as I've highlighted in the Monday video. The fact that we're seeing this heavily in the red today suggests to me that it could even come today. So keep an eye out for this dollar yen pair, because we could be seeing, we could be setting ourselves up for, barring any further central bank intervention, we could be setting ourselves up for some more downside to come. Finally, WTI, again it's been another bearish day for WTI. We have seen it break below those previous lows, below Monday's lows following that brief retracement. Once again, what we just saw was support turn resistance, and what I like about this is the signal was there's quite a decent signal, I guess. There we saw some profit taking at these 28.25 levels, which, as I've highlighted previously, was a prior level. 28.25, which is a prior level of support. We saw some profit taken at this level. The pair rallied back towards this previous support turn resistance, and then we got this very nice shooting star candle with the pair trade with WTI trading up towards 30.20 before closing below its opening price. This is a very nice bearish candle, and from then on in we have seen some heavy selling. Now we did see it, of course, rebound a little bit at this stage back towards this 28.20 levels, but again it came up to these prior support levels and then turn into resistance, and we've seen selling ever since. So some very nice technical moves on this WTI at the moment. The next big support levels for me come around these 25.75 to 26.50 levels. 26.50 of course being the next notable support for me, again highlighted on the video at the beginning of the week, the commodities charting analysis. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.